Good morning, traders. This is Bob Haberkorn, company from RJO Futures here in Chicago on Wednesday, June 5th. We're here to talk today about the job number that comes out on Friday, June 7th at 7:30 Central Time before the market opens. What we're looking at right now is we'll see, what to anticipate here today. We're going to cover, Jim Barrett's here with us. He's going to cover the equity markets. Tom Powers is here. He's going to cover the bond markets. I'll cover the precious metals, and then we'll also talk about what to expect. Today we had ADP come out this morning. That missed a bit here. It came out at 138,000. The expectation on that was 165,000. Started some weakness off in the equity markets based off just after that number came out. See how it plays out. The number that comes out Friday, which is the number that comes out from the government, they're expecting general consensus is about 175,000 right now, and the rate just remain at 7.5%. So, ADP missed. We'll see what happens with the big number here Friday. But what are you looking at in equities, Jim?
Well, the interesting thing about equities, obviously the correction's underway, is that bad news is all of a sudden bad news. It seems like confidence in further stimulus has wavered a bit. People realize this QE is not going to go on forever, almost regardless of what the news is. And this big bond correction that started in early May has rolled into stocks here in very late May, and we got a pretty weak market all of a sudden. The utilities are down hard. A lot of the dividend-paying stocks that people chased up to pretty rare levels have come down pretty hard. The Japanese stock indexes, which did lead and were up the most, I guess, worldwide this year, 2013, have come down the hardest also. Now there was some Japanese news overnight. The Prime Minister basically unveiled some new policies and got sort of a Bronx cheer. I think the Japanese indexes are down 4%, so that kind of weak background opened up some weak activity here this morning, and we've broken down into new lows off the highs. I think we traded as low as 1609 in the S&P so far. However, support is not all that far away. I mean, I feel like old highs back in late April around the 1593 area should be the first level of good long-term support.
Do you think this, with what we saw the last 2 days, I mean, the day's yet to be over, and we have had some bounces back as the day goes on, but if the number does miss, I mean, you touched on the beginning, good news is bad news and bad news is good news lately. I mean, could this be the start of the correction everybody's talking about?
Yeah, I mean, obviously this is a pretty good pullback, biggest two-day pullback in a long time, and by the way, the whole Tuesday up thing ended, so I mean, there's a couple of there's a much more negative tone than we've seen in a while. As far as it's been a pretty simple environment. Bad news up to really recently, the last week or two, people had confidence that the overall stimulus from the Fed would carry the day. That seems to have weakened quite a bit. So
it's definitely subsided.
Yeah, exactly. And so bad news, may just be bad news. We'll see. I mean, we'll see. The last couple of years, we got a summer slowdown. This ADP thing may indicate that we may have that again. I mean, government spending's been curtailed a little bit. There's still kind of reluctance out there in the business community to expand. We'll see.
It's still, I mean, the way I'm looking at with that is I still think that there's, the downside does appear, I think, to be limited here just because of the equity that's out there right now. I think money flow into equities, but we'll see how it plays out.
I would agree with that, right. In fact, some of these major fund managers and banks were kind of on the news wires yesterday. Gunlatch of the double line, was saying, at some point these dividend stocks will be buying again. He said, I believe that he expected some support in the 10-year to show up. So, right.
It just seems like they're buying anything, on the pulse. But we'll see. I mean, the job number, I think, we'll set the tone maybe going into next week. maybe support comes in, like you said, or the April level of
Well,
what,
yeah,
1590?
the old 1593 to 1595.
Yeah.
And that's not too far away.
No, not
So,
at all. We could
yeah.
be there before the day's over, before
it's
we even get to
possible.
this job number.
Yeah.
So, Tom, on the equity mark, I mean not on equities, on the bonds. What are you looking at there?
You know, I think Friday's number is going to be hugely important because it'll give us direction going forward, what to look for leading up to the FOMC minutes later this month. The expectations are that a positive number means the Fed can start to pull back on QE. You know, and I think these expectations will get met at some point in the near future. But, you know, one thing to keep in mind, if they do start to decrease the amount of purchasing, it doesn't necessarily mean they're going to start selling everything either. You know?
Sure.
So it'll just simply be putting the gentle brakes on QE. If the number comes out weaker than expected, I would, you know, it's going to make it more difficult for them to argue an end to QE, and they'll most likely continue purchasing bonds then at that point. Treasuries, either way, I think are going to remain vulnerable up at, you know, ahead of their June 19th meeting. But given the weak manufacturing numbers that we've seen recently and the slowing recovery out of Europe, Asia, you know, I don't expect any major changes one way or another when
Yeah.
they make that announcement. The housing market, again, is starting to show some signs of recovery as well. But this seems to be mostly fueled by big investment companies and not first-time home buyers. So,
Yeah, it's not your typical housing recovery that you're seeing right now.
No.
That's definitely for sure. And then to talk about the bond market, I mean, what about the yields and with what you're seeing? I mean, you're starting to get the whiffs now for the first time of rates going up on the 30-year.
Yeah, and I think they will slightly, but I think overall, you know, Bernanke and the Fed, they've said that they're going to keep rates near historic lows until we reach 6.5% unemployment. I think we're a solid year at least away from that.
We will see. Because, yeah, I mean, those rates creep up, and that housing being such a big factor in the economy, I mean, that could be disastrous, you know, in itself. But, you know, and then to touch on the precious metals, specifically gold and silver will follow suit. From a technical aspect, if you look at a daily chart on gold, you got a flag formation forming right now, which usually indicates a big move is in the works coming. I'm of the opinion right now that, you know, we've seen this thing fairly sideways for the last month and a half after that big drop that it came out a month and a half ago. I think the bottoms are in on gold. It just the technical pattern as well as the fundamentals that are out there right now. I think Europe is a major factor right now. That still there's a lot more news that's going to come out of Europe, bad news. And I think that in itself will lend more flow into gold here moving forward. You know, summer months, June, July, then August, typically our gold and silver kind of fall asleep a bit. But I do anticipate maybe over the next week or two things to start changing. Watch today on Wednesday for a close above 14 and a quarter. That's kind of what we need. Actually, a close above 14. But to really confirm something back to the upside would be 14 and a quarter. It's just so sideways right now, a lot of congestion, but it does continue to make higher lows. So it's key to watch. I think right now the best way to play it with, you know, keep an eye on the option markets as well as, you know, futures, but be cautious. But just something starting to form here on the chart that looks like we could be anticipating a big move. You know, some people are of the mind that this could be to the downside. I'm of the opinion, I think right now with what I'm seeing, as of today in the last few days, trading sessions, that this probably is a move. You're going to see some strength here and some bulls returning to this market. If you have any further questions about the job number or just would like to talk markets, feel free to contact any of us, Tom Powers, Jim Barrett, or myself, Bob Haberkorn, at any of our trade desks. We'd be more than happy to discuss this. Remember to follow us on Twitter and on Facebook. And futures trading does pose significant risk. It's not suitable for all investors.